What's going on, people? Welcome back to the YouTube channel. So in this video we're going to take a look into the trading sessions, or some people call them trading kill zones. It is completely up to you what you call them. I just call them pretty much trading sessions. And we're going to take a look into the three trading sessions that I use the most, right? So the three trading sessions are the Asian range session, or the Asian session, London session, and New York session. Okay, so what I want to do is I want to touch on a few things which are, they're repeating phenomenon, specific to these trading sessions. So first we're going to take a look into the Asian range session. Okay, so typically what happens, the Asian range creates liquidity. It's typically a consolidated session, right? Depending on what pair that you actually are looking at. If you're looking at Euro USD, Euro and USD is not in the kind of Asian session. It's not time for this pair to be trending or moving, really. It's meant to be kind of consolidated, just moving sideways, getting ready for London session, which is for the euro, or US session, which is obviously for the dollar. Okay, so the main kind of characteristics that we're looking at for the Asian range is consolidation, right? We're looking for liquidity to be built, and just seeing what side of the market price wants to continue from. So I want to give you one example here, right? So this example here, you can see this is my Asian range indicator. It's just called Asia session high, low, mid lines. So if you want to use this is absolutely fine. The only thing I will say is on Mondays it doesn't actually form, right? So what I have to do is I have to draw a box. But I think this is also good for me because when I wake up on a Monday morning, it's actually like Monday midday for me, the Asian session isn't there, right? So I need to be focused, I need to be aware of what's going on in the markets. So I feel like drawing the Asian session for me on a Monday or a Monday midday is great to kind of get my mind in tune with what I'm actually doing in the market. Okay, so looking over to this one here, right, we have a push to the upside and we have a tap into a 15-minute POI right here. Okay, and then we pretty much just run straight back down to the downside, but we do leave a relatively large wick on this push to the upside, which taps into this POI. Okay, so what we actually can see here is from the London session here, which for me it begins at 7 AM GMT. So what we can see is London puts in, takes out the liquidity resting above the Asian range, and then pushes further to the downside. So this is what we can see with like kind of judas swings. This is kind of like the whole idea around a judas swing, is running out the liquidity from one side of the market and then running out the liquidity to the other side of the market. What some people do is they use the Asian range to place a buy limit or a sell limit or a sell stop or buy stop, and what they do is they're trying to wait for price to break out of the Asian range to then continue price either up or down, right? And what then ultimately happens is, let's just clean the chart up. So they buy with a buy stop here, right? And then they push up a little bit and then instantly just reverses back to the downside. And obviously this then takes out that liquidity, which was just resting above this Asian range. Okay, and then same again for the people that are selling from here, right? So we get a poke through and then we pull back up. So potentially what that, maybe their sell stop losses are just above this level here somewhere, and then obviously we push down a little bit, then we come all the way back up, right? And we take out everyone that has potentially put their stops to break even. Once this started to push back to the down, or to the downside, they're thinking, right, we're in profit, all good, stops to break even, then we come back up, take that out, and then we continue back to the downside, right? So actually they were on the right side of the market, but unfortunately they didn't get in the trade in a good position. Okay, so the next session is London session. Okay, and the repeating phenomenon in London is either putting in a high or a low of the day for predisposed bearish or bullish days. Okay, so as you can see, the market here is bearish. We are pushing to the downside on the 15-minute time frame. So what we've done here is we have reacted from this POI, this hourly POI right here. Okay, and then we've pushed to the upside, but then we've started to react from a 15-minute POI here. Okay, so then what we've actually got is a predisposed bearish day, because we are continuing the momentum to the downside. Okay, we're reacting from a POI inside of the premium. Okay, so we can look at that as using the Fibonacci. We can pull that from here to here. So that's just the high of this leg here. Okay, so this is the high which starts this push to the downside. Right here we've got like a little bit of a consolidation, and this is where we can then use that concept that I've provided you on this YouTube channel about ranges. Okay, so we've got a low here and then a high, right? So then we get the breakout, the retest, and then the continuation, right? So that's the reason that we're using the Fibonacci from this area here. Okay, so we're inside of the premium, we have reacted from this level, and then we start to push to the downside. Okay, so as you can see right here, this is 8 a.m. GMT, and we put in the high of the day. So I just have another example here. This was the previous day. So same again, we have a 15-minute up close candle before this push to the downside, which breaks structure. Okay, we have the Asian range. Okay, so we push down, we push up, we take out the Asian range high. Okay, and then in London session here, what we do is we put in the high of the day, and then we push further down. Okay, so as you can see, this does play out very nicely. What I would like you to do is obviously go through this, back test this for yourself, make an understanding for yourself, right? My Asian range starts from midnight GMT, and then it finishes at 5 a.m. Okay, so that's the time zones that I use for my Asian range. For London session, I use 7 a.m. GMT to 10 a.m. GMT. Okay, so that's like my parameters for Asian range and London session. And then for New York session, starts at 12 o'clock midday GMT, and then finishes at 4 p.m. GMT. Okay, so the next thing that we're going to be looking at is the New York session. Okay, so the repeating phenomenon that happens with New York is typically it will only give you two things. It's going to give you either a continuation or a reversal. Okay, so here we can see literally 12:15, just past midday, we get a little bit of a pullback, right? But then we tap into the premium of this range, or this leg, should we say, and then we have a place in which we can look to take a short, right? So we can see on here on a lower time frame, if we just jump down, we can see that we have a prominent high right here. Okay, this takes out this high, okay, and then this pushes down and ultimately breaks structure further down here. Okay, so we can see that this is potentially a valid place to take a trade. Combining that with, we are also in the premium. Okay, we can then look to see, okay, is this going to sweep liquidity and then push to the downside? Do we have our entry model? Okay, and as you can see here, for me, I do have a very nice entry model right here. And if we just look to the left side, we can see this. Let's just get rid of this. This is the low right here. Okay, so this was the target, and then as you can see, it's a 43-1, and then price ultimately reaches that the same day, about, let's just see. Okay, so about 7:40 p.m. and we met that. Okay, now what I want you to understand is obviously this doesn't always happen, right? So you can't go into every single day thinking, oh, you know, Liam said that the low of the day is formed in London and then New York is a continuation or a reversal, right? As you can see here, we have the Asian range, okay, and then we take out the Asian range high, but then we do take out the Asian range low as well, right? So one tick, the Asian range tick, that is confirmed. But now if we look at the parameters for London session, if we draw some vertical lines here, we can see that this is my London session, and we don't put in the high or the low of the day, right? New York here actually puts in the low of the day, and then also puts in the high of the day, right? So as we can see here, we do have a reversal from New York session. So we have Asian session tick, we also have New York session tick, but London session doesn't play out, right? But what we need to do is we need to understand structure. So we need to build our narrative and our understanding around structure. We need to be looking at liquidity, we need to be looking at POIs, we need to be looking at efficiency in the marketplace. Once we build all this narrative up, what we can do is we can then start looking for these repeating phenomenon to happen. Okay, so if we do have a nice consolidated Asian range, okay, what we can do is we can look for the high to be taken out. So here we have the high taken out, and then we push down and we take out the low. Here we put in nearly the low of the day. If we just draw a trend line out from here, you can see that just after London session, this does poke slightly lower, okay? But like I said, this is not absolutely perfect. It does happen very frequently, but you can't expect it to happen every single day, okay? So you need to be careful with this, but it's a good framework to work from to understand potentially where you could be in the market and where the market could go if it's lining up with your narrative and your bias, shall we say. So how do we trade these sessions? Okay, so same again, we have the high of the day here in London session, right? What we can do is we can bring the replay tool back here, and then we can get down onto a lower time frame, right? So we are inside a 15-minute POI. We have swept the Asian range high. Now what we can do is we can look for our entry model on the lower time frame. So as I've provided to you in a previous YouTube video, we have a higher time frame sweep on liquidity, and then we also have a lower time frame sweep on liquidity. We are inside of a POI, which is also in the premium. So now we can look for our entry model, okay? So if we get down to the seconds time frame here, what we see is we have a sweep to the upside, and then price returns back to this POI here, okay? So the reason that this one is valid is because we broke to the upside, okay? This gives us a confirmation that this is the low, okay? What we've done is we pushed back into this area here, then we pushed higher, and then we formed a new POI, which is, this is just a slightly higher time frame, and then we broke lower, okay? So this is then confirming that this low has failed, and we are then potentially pushing lower, okay? So once we pull back into this POI, we can then look to take our entry, okay? And this is that 53 to 1, and we are targeting all the way down. Let's just go all the way down here, okay? So this is this entry right here, just at this high, and same again, we're targeting that low, okay? Because what we understand is we've failed to make a new high up here, okay? We've reacted from a POI, now we can expect this low to be taken out. And as you can see, if we play price forward a little bit, we can see that price just keeps dropping. We do get, same again, if we look at my indicator down here, we can see when New York session is. What we can do is we can anticipate that potentially New York is going to give us a continuation, right? So we can use that same concept, right? We've got this leg of price. We can wait for price to pull back up into the premium, okay? And then same again, we have swept liquidity. So now what can we do? Get down on a lower time frame and look for the same thing again, right? So we have this high has been swept here, right? Then we have this high being put in, it comes back down, reacts from this area here, puts in a new high, makes this low valid, okay? So then we push lower, okay? Break this low. There we go, that's the confirmation. And then we pull back up into this POI. And what we can then do is look at this high here and say this is liquidity, right? This is liquidity here, okay? So we can look to enter roughly on there. Boom, we get tagged in, and then price just drops from there, okay? So if you enjoyed this video, guys, I hope this helps. Drop a like, comment, and subscribe, and I'll catch you guys in the next video.